Namaste. Good morning. We continue and complete the PGBP and then progress to capital gains. We completed 3 questions. I am in the 4th question. Calculate the gross total income of Mr. Indra Kumar Basu on the basis of the following profit and loss account. Gross profit, interest on debentures, which will go to IFOS, rent from house property, which will go to HP. On the debit side, interest, repairs and renewals, insurance, depreciation, compensation, legal charges, labor welfare, subscription, net profit. Interest includes 200 on loan taken for purchasing debentures and 300 on loan taken for reconstruction of house property which has been let out. The expenses relating to house property let out are 40% of the repairs and renewal expenses. Depreciation includes 1,200 for the house property. Compensation was paid to an employee whose dismissal was in business interest. That is known as retrenchment compensation, where an employee is sent out. It is a normal business expenditure. Retrenchment compensation is a normal business expenditure. Law charges include 2,000 relating to a petition filed for breach of contract and the balance regarding sales tax appeal. Both are allowed. As compensation is an income, so is the compensation paid also. Compensation received is a business income. Compensation paid is a business expenditure. Subscription include 2,000 given for election purposes to a political party, disallowed. The amount not debited to P&L account are expenses festive occasion allowed, theft of cash allowed, expenses on new telephone connection allowed. These we need to reduce it separately. So first we have to compute always in such a question. Okay, again I will repeat it in the assessment. First compute the business income separately, then go for gross total income. Okay, let's start with computation of business income. $1,30,000. But not a business expenditure. Interest 1,800 includes 200 and 300. Interest for purchase of debentures 200. Interest for $300. Repairs and renewals 40% is for house property. 40% of repairs and renewal to be incurred for house property. Insurance, no problem. Depreciation includes 1,200 of house property. It's not a business asset, so We will disallow it. Okay. Compensation is a proper business income since there is an adjustment specified. In exam also, follow this. Since there is an adjustment specified, write it. It is allowed as a deduction. You should write it. Okay. Insurance includes, sorry. Insurance includes 30% fire insurance of the house property, 30% workers' accident insurance, and balance life insurance. So, 30% insurance for fire insurance on house property disallowed. 30% workers' accident allowed. Life insurance disallowed. Okay. 30% of insurance towards incurred towards house property. %40 of insurance towards life insurance premium. Law charges include 2,000 relating to a petition for breach of contract allowed. Legal expenses. Since there is an adjustment, please write. Or for filing petition and sales tax appeal. Both are for business purposes. Hence allowed. Subscription towards a political party disallowed under section 37 2000. Non-business income, non-business, that is which is a interest on debentures. Done. I am now going for computation of total income. Question has only asked for gross total income. If they have asked for total income, I will deduct 80C insurance premium and a 80G political party donation. Okay, I'll write it as a note and keep. The next question is something which is there in our material, but we did not work at that time. Okay, and I wanted to take it as an opportunity to work it now. Okay, Mr. A commenced the operation of business of setting up warehouse facility for storage of food grain, sugar, and edible oil, which is not a specified business. He incurred capital expenditure of 80, 60, and 50 on purchase of land and building during the financial year 22-23 exclusively for the purpose of the business. The cost of land which is included in that are 50, 40, 30 respectively. During the year, he incurred during this year, he incurred capital expenditure of 20, 15 and 10 for extension or reconstruction of the building purchased and used exclusively for the above business. Compute the income under PGBP for the assessment year and the loss to be carried forward, that assuming A has fulfilled all the conditions specified under 35 AD and wants to claim it and has not claimed any other deductions. The profit of the business of setting up warehouse facility for storage of food grain, sugar and edible oil before claiming 35 AD or depreciation is 16, 14 and 31. Also assume in respect of the expenditure incurred, the payments are made through account payee check only. Compute the tax payable by the A and the benefits available. Read through. I start with the working note for building. Working note for building. Particulars, food grain, sugar, edible oil. Expenses incurred in 22-23. Expenses incurred in the financial year 22-23, 80 lakhs, 60, 50. Less cost of land included in such expenditure for which neither 35 AD nor depreciation can be claimed. So for land, we know that no depreciation. Also 35 AD you cannot claim for land. 20, 50, 40, 30. And expenditure incurred in financial year 23-24 for construction. 2015-10. Total value of building. Are you clear? Okay. Treatment. How to treat this? Remember, in the case of food grain, you can claim it as an expenditure under 35 AD. Okay. Expenditure under 35 AD. Similarly, here also, whereas in the third case, depreciation at the rate of 10%. Now I'm going for computation of income. The profits before taking up are 16, 14, 31. Profit before charging 35 AD or 32 is 16, 14, 31. Less expenditure under 35 AD. Less depreciation at the rate of 30% on building used for edible oil. Which one? No, sir. Printing mistakes, sir. Typing mistakes. 35 AD. No, sir. 35 AD only. Any doubts? You're clear? You're clear, friends? You're clear? Okay, okay. Loss from specified business. This can only be carried forward and cannot be set off against edible oil business. Is that right? Okay. Loss from specified business, you don't have an option of setting off. You don't have an option of setting off. It can only be carried forward. Okay. Income of edible oil business. Total income. Are you all understanding, friends? Okay, okay. Compute the tax payable. Compute the tax payable. Compute the tax payable. Wait. Okay. Compute the tax payable. Friends, please understand. Whenever I am claiming 35 AD, 10 AA, if the word tax payable comes, they are questioning me on AMD. They are questioning me on AMT. Please remember that. So we should now rework the all adjusted total income. And then only I can work out tax. Computation of adjusted total income under section 115JC. Computation of adjusted total income under section 115JC. Total income after allowing all exemptions, expenditures, and deductions. And expenditure under section 35AD claimed. So I have claimed expenditure of 50 lakhs plus 35 lakhs. I have claimed an expenditure of 85 lakhs, 50 lakhs for food grain and 35 lakhs for sugar. Is the class understanding? So I have claimed 85 lakhs less depreciation at the rate of 10% because it is building for a capital expenditure claimed under section 35AD. If it had been machinery, I would have claimed 15%. Okay, since it is 10%. So this is my adjusted total income. This is my adjusted total income. Whenever, if they have asked me what is total income, I would not have done the ATI working. If they ask you compute tax, please remember to do ATI working. Please remember to do ATI working. Base tax on total income. My total income came to 28 lakhs minus 18 lakhs into 30% plus 1,12,500. 18 lakhs into 30% plus up to the first 10 lakhs, we all know it is 1,12,500. 18.5% of adjusted total income. Okay, 1 crore 4,50,000 into 18.5%. And surcharge at the rate of 15% for AMT since ATI has exceeded 1 crore. Okay, so 115 JD gives me a benefit of tax credit. 115 JD gives me a benefit of tax credit, which can be carried forward and set off. Okay, friends. So whenever we are claiming 10AA, 35 AD, in our mind, we should be very clear. If the question asks for tax payable, we should also do AMT provisions. Okay. Okay. We will continue with the PGBP after some time in the assessment of individuals. Now I am moving on to capital gains. Now I am moving on to capital gains, a quick recollection of the chapter. To tax an income under this chapter, two conditions should be there. It should be a capital asset and it should have been transferred. Okay, to tax an income under the head capital gain, two conditions are needed. One, it should be a capital asset. Two, it should have been transferred. The negative definition makes it more interesting, more clear about it. Okay, so the law also says what is not a capital asset. Okay, not a capital asset. Okay, that is stock in trade. Okay, rural agricultural land. Okay, movable personal assets other than jewelry, work of art, architecture, and painting. Okay, these are not capital asset. These are not capital asset. Don't worry about gold bonds and special bearer bonds. Okay, right? These are not capital asset. Similarly, where there is a change in the ownership and possession, we call it as transfer. Where there is a change in the ownership and the possession, we call it as transfer. And there are something known as not a transfer. Not a transfer, okay, which is nothing but gift, amalgamation, demerger, liquidation, conversions, all conversions, even debentures into preference shares into equity shares, firm into company, company into LLP, sole proprietor into company. None of the conversions are transfers. None of the conversion. They are given the conditionalities, okay, and holding subsidiary transaction. These are not. So the front line of this chapter says, okay, capital gain in income is taxable under the head capital gains if two conditions are fulfilled. It should be a capital asset. It should have been transferred. Capital assets are these things. Transfer are these things. Okay. Okay, friends. Okay. Now, I am going to go for classification of capital asset. Okay. They are classified into STCG and LTCG. Why should I classify? Why should I classify? Three reasons are there for classification. One, mode of computation is different. Because for a LTCG, I will do indexation, whereas for an STCG, I will not. Mode of computation. Second, set of provisions are different. STCL can be set off either against STCG or LTCG, whereas LTCL can be set off only against LTCG. Okay. Third, rate of taxes are different. LTCG are taxable at special rate. STCG except shares are not taxable at special rate. So, when I look into classification, okay, basically I divide it into listed shares, listed securities, okay, up to 12 months short-term capital asset. Up to 12 months short-term capital asset. More than that, long-term. Okay, unlisted shares, immovable property, okay, up to 24 months, it's a short-term capital asset. Other assets, okay, up to 36 months. It's a short-term capital asset. That which is not a short-term is a long-term. That which is not a short-term is a long-term. Now, something away from this. Next year, there are only two classifications. No more 36 months. They have removed it. Only 12 months, 24 months. But that is only in the next year. Because when you talk to some persons, they will tell you, no, you are reading a old provision. For us, financial year 23-24. So tell them that I want to read that only. Okay. And keep understanding this only. Okay. Next year only, so much of changes in capital gains. Okay. It's so that after exams, you can forget capital gains. Okay. It is at that level, because in final you have to newly study. Indexation is neither gone nor there. It is in the midway. Okay. It is in the midway. Okay. Imagine if you are saying shoe, okay, imagine my position that I have to teach three provisions for them now, okay. That is, if the sale has happened before budget date, which is July 23rd, with indexation. If the sale has happened after budget date, two options the finance minister has given: pay at 20% with indexation, or 12.5% without indexation. So for this year, I told you one particular had a RFA provision. For you alone, you will have a problem. This year, all the, because it is not a February budget, election year, the budget was in July 23rd. Up to July 23rd, one provision. From July 24th, another provision. Okay, so forgetting that, now why I am saying this is, people might tell you no, capital gain is taxable at 12.5%, you are wrongly doing at 20%. My dear friends, for Jan examination, it is only the old system. Okay, and the biggest motivation I can give you, not a threat, but a motivation is, okay, clear Jan exam, otherwise we will read capital gains fully newly. Okay, so right, so one thing, I'm not doing it as a rule, but one thing which I feel is, the institute also will not question very deeply now on this, because the law has changed. Always the institute has the one unwritten law. Okay, when the law has undergone a change, don't go into an intricate provision of that particular aspect. So a capital gain question will almost be a simple question this time. Okay, though we will cover everything. So this is the classification. Reason of classification, I have told you three: mode, set off, and rate of taxation. Am I clear to you? Am I clear to you? So the benefit of indexation is the key factor. Before going into all these things, though I know you have written it once in the classroom, one more time we are writing it, so that we are becoming more stronger in this concept of various places where full value of consideration, cost of acquisition differs. Okay, all these things. Okay, full value of consideration. Normally, this is the sale value, but in few cases, it changes. Extinguishment of asset, that is destroyal of an asset. Destroyal of an asset. Insurance compensation received. Insurance compensation received. Okay, taxable in the year of receipt of compensation. But please remember, numerator is year of transfer. Please remember, numerator is year of destroyer. That is something which we have to be really cautious. Okay, I might tax it in the financial year 23-24 for an asset which got destroyed in 22-23 or 21-22. So the 348 will not be the numerator, it will be some other years. Okay, okay. Compulsory acquisition, government compensation, same, put it as same. Okay, numerator is the year of compulsory acquisition. Okay, same, my dear friends. Shall I? Shall I? Okay. Compulsory acquisition. Then asset converted into stock in trade. Okay. Year in which stock is sold. Year in which stock is sold. Taxable in the year of sale, but numerator will be, sorry, no, the full value of consideration is wrong. This is FMV on the date of conversion. Sorry, friends. But the numerator will be year of conversion. Specified agreement. Joint development agreement. Okay. Value of land and building allotted plus monetary consideration. Taxable in the year of completion, whereas numerator will be year of agreement. Four cases, please be aware that the numerator might not be 348. Might not be 348. Extinguishment, compulsory acquisition, conversion of asset into stock in trade, and specified agreement. In these cases, numerator need not be. If it is the same year, fine. If it is a different year, please be careful. Am I clear? Am I clear? Okay. Friends. Section 50B, slump sales. Okay. Fair market value 1, that is outgoing assets, FMV, or fair market value 2, FMV of incoming assets, whichever is higher. Okay. Stamp value exceeds 110% of actual consideration, then take the stamp value. Then take the stamp value. Is the class understanding? Okay. TCA. Okay. Sale of unlisted shares. Are you all understanding this? Okay. Partner introducing capital, asset as capital, value recorded in the books of the firm. Cost of acquisition. Normally, this is the purchase price plus expenses incurred at the time of purchase. Normally, this is the purchase price plus expenses incurred at the time of purchase. Okay. However, when it will change? Asset acquired before 1/4/2001. Okay. Actual purchase price or FMV as on 1/4/2001, whichever is higher. However, FMV cannot exceed stamp value prevailing on that date. Okay, so if a stamp value is lesser than FMV, take the stamp value. If stamp value is more than FMV, take only the FMV. Are you all understanding? Okay. Gift from a relative. Okay. Cost of the previous owner. Okay. Gift from a non-relative. My dear friends, now is a time we clear. At that time, I taught first capital gain. So I came and taught you this in IFOS chapter. If I am getting a gift from a relative, that is not taxable in my hands in section 56 IFOS. So when I sell that, the cost of the previous owner is taken. If I get a gift from a non-relative, from a friend, I get a gift. And in IFOS, it becomes taxable. If the value of gift exceeds 50,000, it becomes taxable under IFOS. So I have already paid the tax for that. Again, when I sell, I cannot take the tax cost of the previous owner. So, okay, income taxable, taxed under IFOS gift provisions. Yesterday itself we saw only if the block goes out of existence, capital gains will arise. Okay, clear? Okay. Now I'm doing a separate table for shares. Okay. Same cost of acquisition only, but separately for shares. Primary issue. Okay. Cost paid for acquiring shares. Rights issue. Cost paid for acquiring shares plus cost, if any, paid for acquiring rights. That is, I pay for the right first, get the right, and then subscribe for the shares. Okay. Cost paid for acquiring shares plus cost paid for acquiring rights. Bonus issue up to 1/4/2001, FMV as on 1/4/2001. It's actually up to 31/3/2000. On or after 1/4/2001 nil. Am I clear? Okay. If debentures converted. Now, this is exclusively for, okay, listed shares purchased on or before 31/1/2018. Actual cost or FMV as on 31/1/18, whichever is higher. Actual cost or FMV as on 31/1/2018, whichever is higher. Actual cost or FMV as on 31/1/18, whichever is higher. However, FMV cannot exceed sale value. FMV cannot exceed sale value. Okay, this is very popular again, so I want the class to understand. If multiple values are given on 31/1/18, take the highest. If multiple values are provided as on 31,118, take the highest value. Take the highest value. Is the class clear? Is the class clear? Okay, fine. Right. So we will take this and do the indexation in the case of long term, year of transfer divided by year of acquisition or 100. Okay. And then when we go to exemptions, okay, we have the following. Just listen. '54. House property to house property. 54. What is sold is also a house property. What is invested is also a house property. Okay. Exemption is actual capital gain or amount invested or rupees 10 lakhs. Sorry, 1 crore. 1 crore, whichever is less. Whichever is less. 10 crores. Or rupees 10 crores. Okay, whichever is less. Okay. 54B. What is sold is agri land. What is purchased is agri land. Okay. Actual or amount invested, whichever is less. Okay. In 54, I forgot to tell you something. If the long-term capital gain does not exceed 2 crores, you can invest in 2 house properties. Where it exceeds 2 crores, you can only get the benefit for 1 house property. Okay. And the beauty of 54B is also for STCA. This is the only section which you can read, which is also for STCA. All other section are only for LTCA. Okay. 54 EC. What is sold is immovable property. What is purchased is bonds of NHAI or REC. Okay. You should have invested within 6 months. So please be cautious about that 6 months. In other cases, you need not worry about other things. But here alone, please be once checking within 6 months. Okay. Actual or amount invested or rupees 50 lakhs, whichever is less. Or rupees 50 lakhs, whichever is less. 54F. Okay. Any asset other than house property. It can even be land. It can even be agricultural land. It can be jewelry. It can be shares. Anything other than house property. Invest in house property. Invest in house property. There is a proportionate computation. Okay. Full net consideration invested. Full did exemption. Partly invested. Okay. The exemption will be gross LTCG into amount invested divided by net consideration. Okay. Don't worry about 2 years, 3 years, etc. All these things will be obviously fulfilled. Don't worry about those things in the examination. It will be there in the corner of your mind. Okay. About the time limits, etc. But with regard to time limit of 54 EC alone, please check, because normally they give some questions without any aspect. Am I clear to you? Okay. Which are all the assets which will not enjoy any indexation? Short-term capital assets will not enjoy indexation. Okay. Listed shares will not enjoy any indexation. 112A, because I am going to tax it at 10% only in a, okay, first 1 lakh not taxable. Depreciable asset will not enjoy any indexation. Slump sales, no indexation. And debentures and bonds, no indexation. Okay, repeating, assets that will not enjoy any indexation are STCA, depreciable asset, listed shares and securities on which STT is paid. Okay, 4 is slump sales, and 5 is debentures and bonds, which will not enjoy any indexation. Shall we start? Okay. Sir. Raja. Yeah, yeah. From the date of conversion, you can take it. During the year, Mr. Madhusudan sold the following capital asset: sale value, cost of acquisition, date of acquisition. Debentures, I don't worry. Gold, 2005. Building, 2008. Assuming that his business income is 347, determine his income. Okay, let's do the computation for first and then total income. uh, 8,42,400 into 348 divided by 2005,6,117 for the other one. Okay, 9 lakhs into 348 divided by 89 happens to be 137. No doubt debentures is also an LTCG. Only the indexation benefit is not available. You should round it off to the nearest 10, 352, 670. You can take it. Question number 2. Sunil has a house property acquired before 1/4/2001, incurred expenditure before 1/4/2001. Any improvement before 1/4/2001 should be ignored. Any improvement, please write and keep it here. Any improvement before 1/4/2001 should be ignored. You cannot take it. And 50,000 after 1/4/2001. FMV of the property 450. On 16/8/2013, such 16/8/2013, that is financial year 13-14. The property was compulsorily acquired by the government under compensation 1150. 20% of the compensation was received now and balance on 2nd June. On further appeal, enhanced compensation 2 lakhs, expenditure incurred for enhanced compensation. Such compensation is received in 25. Compute the income under the head capital gains for assessment year 24-25, 25-26 and 26-27. Read that. One minute. One minute. Okay. First, we will theoretically understand lot of things before going into the working. Friends, we all know government compensation is taxable in the year of receipt. Where it is paid in installment, in the first installment, they will tax it. Okay. The question was designed in such a manner that I have received 31/3/24. So financial year 23/24, that is assessment year 24/25, I will tax it. Nothing in assessment year 25/26. For the balances, they will determine the compensation. Compensation is 11,50,000. That is determined. I first pay 20% or first pay 30%. Next pay another 30%. Next pay another 40%. Whatever may be the split up, it is always taxable in the year in which you receive the first installment. Okay. Into the last page as the indexation, the last page of the material. Okay. Uh, on uh, on 16/8/2013, that is nothing but 1314. The last page of the revision material has the indexation. Okay, that is nothing but 1314. 1314. May I know what is the value? 220. 220. Okay. Okay. 220. Financial year 201314, year of compulsory acquisition by 100 base year. I have improved it on 17/7/2010. So 10/11, please. 167. Gross LTCG of financial year 25-26 as additional compensation is received on 18th August 25. Financial year, assessment year 26-27. I accept. Am I clear? Am I clear? Shiv has jewelry acquired in 2010. Shiv incurred improvement expenditure on jewelry by adding diamonds worth 3 lakhs. On 18/8/21, he transferred such jewelry to his friend Mona for 40 lakhs. Shiv already has a self-occupied house property in Lucknow. However, on 17/3/22, he purchased another house property for 30 lakhs for the purpose of letting it out. As on 5/4/23, his friend offered him a house worth 25 lakhs, stamp duty being 14 lakhs, for 15 lakhs only, and Shiv purchased the same. On 7/4/24, Shiv sold the newly acquired house from his friend for 19 lakhs. Value determined for the stamp authorities is 22 lakhs and market value as on the date of transfer is 26 lakhs. Calculate capital gains in the hands of Shiv for several years. Just an interesting question, so I thought we'll work out. Though I know that for your year only they will question, but there is something interesting we will try to work out. Read the question. Okay, okay. Let's decipher the question. That is, in the financial year 21/22, he sold some jewelry for 40 lakhs. In the financial year 21/22, which was acquired and improvement done in, which was acquired in 10/11 and improvement done in 13/14. Okay. Using that money, he has purchased a house property 54F. He sold jewelry in the financial year 21-22. Using that money, he has purchased a house property, okay, for 30 lakhs for the letting out. Okay, he already owns a house property, no problem. 54F says you can own one property. You cannot own more than one property. So 54F is available. But remember, from this date, he should hold it for 3 years. The newly purchased property should be held for 3 years. But unfortunately, okay, I think he is maintaining. As on 5/4/23, in the current year, his friend offered him a house of 25 lakhs for just 15 lakhs and he purchased the same. On 7/4/24, Shiv sold the new house property acquired from his friend. So he has not held it for 2 years. He has sold it within that time for 19 lakhs. Value determined. Okay. Where is the market value? So we need to work. I'm going to work for 3 different years. One is 21-22. Another is 23-24. Last is 24-25. Last is 24-25. This new house here, I mean that 54F house he has maintained for a longer period of time. Okay, that is not the one which is sold. Only the new house which he has acquired has been sold. There are something very interesting computations. That's why I earmarked this question to be worked out in the classroom. Full value of consideration. The jewelry is sold for 30 lakhs. Less
40.
Huh?
40 lakhs.
Sorry, 40 lakhs. Less ICOA. Okay. 5 lakhs into financial year 21-22. Give me the numerator of 317 divided by financial year 10-11. Financial year 13-14. Improvement 220. Less exemption under section 54F. This can be claimed for second house property also. This can be claimed for second house property also. Shall I? Okay. Right. Since the entire net consideration is not invested, proportionate exemption, which will be gross LTCG into amount invested divided by net consideration, 26 lakh 18,625 into, I think we have invested 30 lakhs. 30 divided by 40 lakhs.
Here exemption computation, the gross LTPG amount.
Correct? You are all understanding, friends? You are all understanding? Okay. Now my computation goes to computation for the financial year 23-24. Though there is no capital gains this year, computation for the financial year 23-24. There is no capital gains as there is no sale of any asset. There is no capital gain as there is no sale of any asset. Okay. Section 56. Inadequate consideration for purchase of immovable property. Inadequate consideration for purchase of immovable property. Okay. Actual consideration paid, I think you have paid 15 lakhs. Oh, there is no inadequate consideration. Sorry. I thought 25 lakhs is stamp value is only 14 lakhs. Sorry. Stamp value is 14 lakhs. Why?
Because he's acquiring one more additional only one house property.
On the date of investment, he should not hold more than one property. Not all together. On the date of, I'll just check and come back. I'll revert to you. Okay. Full value of consideration for the financial year 24-25. Okay. Actual sale value. Shiv sold this house to his friend for 19 lakhs. 110% of sale value. Stamp value. 22 lakhs. Okay. Since stamp value exceeds 110% of actual consideration, stamp value will be taken as full value of consideration under section 50C. Question number 4. Asif purchased a vacant land, registration and other expenses 10%, constructed a house in 6-7. That was in 5-6. This is 4-5. This is in 6-7. He entered into an agreement for sale of the above house with Mr. Hari. Sale consideration. Asif received 20 lakhs as advance in cash. The stamp duty value on that date 6/20. The sale deed was executed and registered on Feb 10th. The stamp value on that date 6/17. Asif paid 1% as brokerage on sale consideration. Subsequent to the sales, that is on 10/2, he made investment of 45 lakhs and 15 lakhs in NHAI bonds. Compute the capital gain for the year. Read through. So if I recollect section 50C and also 43CA 56, on which date stamp value should be taken? Where advance is received by approved modes, date of agreement. Where advance is not received or advance is received by unapproved mode. This question. Date of registration should only be the stamp value. Date of registration will only be the stamp. cost of transfer. Please remember, in such question, when they are given brokerage, it is only on actual sale price and not on the full value of consideration. We have taken a notional full value of consideration, but it will be on the actual sale price. Mm. 80 lakhs cost of land plus 8 lakhs registration. So 88 lakhs into 348 divided by 2045, they have given 113. Akka clear? Okay. Okay. Let's move. Determine the capital gain or loss on sale of listed equity shares, STT paid, and units of equity funds, and tax, if any, payable thereon in the following cases, assuming these are the only transaction covered under 112A. Mr. Shagun purchased 300 shares in A Limited before 31/1/18 at a cost of 400. He sold all these shares for 1,200. The price at which these shares were traded in the National Stock Exchange was 700, 680, and 660. Always the highest price. Always the highest price. The basic exemption limit can be adjusted, so that will be taxed if it is not available. Pakka clear? Mr. Raj purchased 200 units of equity oriented. Oh, it's the same question, part B actually. Equity oriented funds before 1/4/2018 at 550. These units were not listed at the time of purchase. Subsequently, units of funds A were listed on 1/1/18 on NSE. Mr. Raj sold all these units at 900. The details relating to quoted price on NSE 750, 700 and 650. Net asset value is 800. Okay. Okay. So in this case, there is an issue that STT is not paid at the time of purchase because it was not quoted at that time. But that is an exceptional circumstance where you have not paid STT because you are not liable to pay STT. Where you have not paid, you have not, because you are not liable to pay STT at the time of purchase, still the provision is applicable. Still the provision is applicable. Okay. Still the provision is applicable. Right. To avail the benefit of section 112A computation, STT has to be paid both at the time of purchase as well as sales. STT has to be paid both at the time of acquisition as well as sale. However, then in such exceptional cases, you can still avail. Okay, not going into the mode of computation because it is the same. Okay, not moding, but remember this, it's an exception. You are not liable to pay, that's why you have not paid. Okay, not that you have evaded it, avoided it, but you are not liable to pay.
So what is the significance of the net asset value?
Because of 30, you take the highest value. Okay, since they have not quoted on that particular day, they have given the net asset value. Don't worry, you take the highest value. Shall I? Mr. Ashish entered into an agreement with Mr. Dhaval to sell his residential house located at Mumbai. The sale proceeds are 20% by account payee draft or agreement. So I will take the stamp value as on the date of agreement because it is received by approved modes, and 60% balance after completion of registration. Mr. Dhaval handed over the possession on 15/12 and the registration was completed on 14/1. He paid the sale proceeds as per the sale agreement. The value determined by the stamp authority, I will only take it as 90 lakhs. Mr. Ashish had acquired the property in 1/4/2001. After recovering the sale proceeds, he purchased another residential house, which goes to section 54. Compute the capital gains. You should not see it. You do it. I'll also do it. Are you clear? Okay, right. With regard to IFOS, what you should remember is basically gift provisions. Both gift and inadequate consideration, difference between, again, the same 110%, so closer to this. Dividend. There is a cap on the expenditure you can claim. Only one type of expenditure you can claim. Loan taken for investment. Loan taken for investment can only be claimed, and that too only to the extent maximum of 20% of dividend. Okay, 20% of dividend. For interest, you can deduct the collection charges, not for dividend. Not for dividend. For dividend, only one expenditure. For interest, both can be, and there is no cap for interest. Whereas here, for loan, you have that. For dividend, you have that cap. Okay, and then that small deemed dividend provision, which is if I get any loan or advance from a closely held company in which I am holding more than 10%, that will be taxable as deemed dividend. That will be taxable as deemed dividend. Question number 1. During the year 23-24, Ratnam received the following. Dividend from Sun Pharma Limited. He has invested in the shares by taking a loan. During the year, he is liable to pay 3 lakh. Further, he has incurred collection charges. Family pension 14,000 per month. Interest received from subletting of house, rent payable, other expenses incurred in connection with the house, lottery income, compute income from other sources. Are you clear? subletting of house property 35,000 less rent paid for such subletting, okay, 20,000. You cannot allow other expenses, only allow rent paid on subletting. Okay, only allow rent paid on subletting. Please do not allow other expenses. Question number 2. Compute taxable income under the IFOS of Mrs. X from the following data. Private tuition fees, winnings, award, pension from employer of a deceased family pension, that is the only available for deduction, interest on bank deposit, director's fees, and letting out of vacant land, that is known as ground rent, which is also taxable in IFOS. Please don't remember, house property only is taxable in IHP. Vacant land is taxable here. Just the addition here alone, 1/3 we will provide. Here alone, 1/3 we will provide. Okay. Here alone, 1/3 we will provide. Otherwise, just an addition. Just an addition. Tell me, as it is in the material itself, we'll complete it. Okay. 25,000 into 2/3, how much it comes to? Total IFOS 10,000 plus 2,000 plus 3,20,000 plus how much you said? 18, huh?
8,333.
8,333. If you deduct, how much you are getting? 16,667. 16,667 plus 25,000 plus 5,000 plus 25,000. 670. I will keep it as 4,03,670. Okay. 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 Friends, we all know that this is taxable at 30. This is taxable at 30. Okay. If at all they have given the amount as net, we know how to gross it up. But I have to tell you something more in this. You will see gross, because this falls under 194J. 194J of TDS, where threshold is 0. For director sitting fees, even if I am paying 1,000 rupees, I should deduct 10%. Even if I am paying, okay. So as a small note, write and keep there in the material note. Okay. Director sitting fees is given as gross. Director sitting fees is given as gross because director sitting fees is given as gross because under section 194J, under section 194J, okay, threshold is nil and tax is 10%. TDS is 10%. Threshold is nil and TDS is 10%. Okay, okay, right? Take a break, come back, we will do the set off. With regard to set off of losses, first I want to recollect whatever I told you yesterday morning. House property loss. Depending upon the regime, it changes. All other things doesn't depend upon the regime. House property loss alone depends upon the regime. If you are in the old tax regime, normal tax regime, total house property loss that can be set off means within the same year is 2 lakhs. Balance house property loss should be carried forward, and there can also be loss from self-occupied property. If you are in the new tax regime, there cannot be a loss from self-occupied property because interest will not be allowed. But on let out property, whatever may be the loss, let the loss be 230, 240, it can be set off. It can be set off. That is the first thing to understand, to remember for house property loss. Otherwise, speculation against speculation, specified against specified, general business loss, set off can be against any income other than salaries. Carry forward and set off can only be against business income, which means general business loss can be set off against specified business income or speculation business income. Vice versa is only not possible. Okay, those are also business, so it can be set off. And capital gain only internal set off, no outside set off. STCL against STCG or LTCG, LTCL only against LTCG, and racehorse only against racehorse. Two things indefinite period of carry forward: specified business loss, unabsorbed depreciation. Two things 4 years: speculative loss, racehorse. All other things 8 years is the period of carry forward. Is the period of carry forward. Following are the losses of Raghu: salaries, income from let out property, loss from let out property, PGBP, IFOS. You are required to determine the gross total income and losses carried forward if he has opted for 115B, which means he is opting out of the new scheme to the old scheme. Okay, if he has opted for option given under, so the option there is you can come out of 115 BAC under normal provision, in which case only 2 lakh of house property loss can be adjusted. Okay, Since assessee has opted the 115 BAC subsection 6, which means he is under normal tax regime. Only 2 lakh of loss can be set off and the balance needs to be carried forward. Cannot be set off, it needs to be carried forward. Mr. Bola furnished you the following: house property, salaries, IFOS, and income from lotteries. Examine and advise Bola regarding, okay, So I told you yesterday also this particular point, that is, even though I can adjust the house property laws against the lotteries, but then when it comes to taxation, lotteries is fully taxable. Lotteries is entire 350 into 30%. Okay, not what has been, what is the total income does not matter for lottery. So the advice will be up to 80,000 you should adjust. Remaining 50,000 you should carry forward. Okay, this 90,000 IFOS loss might be because of racehorse, which also needs to be carried forward. Okay. Loss from house property can be set off against any income. However, even if we set off against winnings, when it ATR. From the following details of Raghu: salaries, house property, speculation income, non-speculation business loss, owning and maintenance, income from agriculture in India, STCG, LTCG, lottery income, racehorse income. Are these two the same? Is these two the same?
No.
One is by betting in racehorse. Another is owning and maintenance racehorse. Very carefully we should read the words. It cannot be set off. On the apparent reading, we will find it to be the same, but no. Income from racehorse means income from betting. Okay? There is a difference between if I go to a race and bet on it and I win, that is a winnings taxable at 30%. If I am a person who is maintaining that horse, that is equivalent to a business, but it is taxable under IFOS because it's not an acceptable business across India. So it is taxable under IFOS. That's why. That is the difference. You are all understanding, right? Okay. So let's go. The second note is in term while computing tax, okay, agricultural income can be reduced. Like how we do, if there is an agricultural income, we add it up, aggregation. If there is an agricultural loss, okay, shall we? Okay. The following details of pertains to Mr. Roshan. STCG, loss from let out property, loss from speculation, loss from card games. Not possible, because you will not allow the expenditure at all. Brought forward LTCL, dividend income, loss from tea business. Mr. Roshan's wife is employed with Ray Limited at a monthly salary of 25,000, where Mr. Roshan holds 21%. Shamita is not adequately qualified for the post held by her in Ray Limited, which means clubbing. What is the provision? Where a person is a substantial interest holder, 20% or more. Spouse is employed in the same concern, then the remuneration of the spouse will be clubbed with the hands of the other spouse. However, where spouse is employed due to technical qualification or skill set, it will not. In this case, the question is clear. So there is salaries, there is house property loss, there is speculation business, and capital gains and IFOS. Okay, let's deal with that. Before dealing with it, loss from tea business 1,06,000. Loss from tea business 1,06,000. Remember, 60% is agriculture, 40% is business. That can be set off against any income. That can be set off against any income. You are clear? Okay, I'm still going under the old tax regime and working out.
Sir, in this one, why did we not set out the agriculture loss?
Sir, agricultural income is exempt from tax, sir. It is only at the time of aggregation of tax we work on. Right. Roman 1, salaries. Before going into this, let me also call out to you clubbing of income, not clubbing of receipt. Not clubbing of receipt. Why I am saying? Suppose Mr. X has invested in a house property in the name of Mrs. X. Mrs. X is receiving 20,000 as rent from the property. You will not club 2,40,000. You will club after providing standard deduction. It is not clubbing of receipt. It is clubbing of income. So here also I will provide the standard deduction. I will provide the standard deduction and then only club. Okay. Clear? Oh, you are going to compute the taxable income if he has exercised the option to shift out of default. Sorry, I didn't see this part. I have worked out accordingly only. Okay, so question number 5. Mr. Mike, a resident individual, furnished the following information in respect of his income: salaries, LTCL on shares of Reliance Limited, STT has been paid both at the time of acquisition and sale, IHP, loss from let out property, interest on self-occupied property in Mumbai, net winnings from online games, net of TDS, we need to gross up, pay profit and gains of manufacturing unit after deducting normal and additional depreciation. The other informations are business loss from manufacturing, unabsorbed, loss from the activity of owning and maintenance of racehorse, loss from let out property in Delhi. Mr. Mike filed for return of income for the assessment year 23-24 before the due date and has opted for section 115 BAC. Compute the gross total income and the amount of loss, if any, that can be carried forward if he wants to continue with the provisions of 115 BAC. Actually, there is no option of continuation. If you have a business income, it is a one-time decision. Even if that statement they have not given, we have to work out under 115 BAC only. Only for a non-business assessee, year to year I can choose. This year I will go by 115 BAC. Next year I will not go by it, older. But whereas for a business assessee, once a choice is made, he cannot reverse it. Okay, read through the question. So that additional depreciation is not going to be allowed. Fortunately, unabsorbed depreciation is only going to be normal depreciation. That loss from self-occupied property, interest on self-occupied property is not going to be allowed. These are all the things to be remembered. Please read it. We will start working. Shall we? Somebody was yesterday also asking me. I have told them, when they give the word income, you need not do the standard deduction. When they have given salaries or gross salary, you need to do that. Friends, loss from the let out property 375 can be fully set off. Of course, even if he is following the old, it can be set off because there is income. Only the net loss cannot exceed 2 lakhs. But here, to be more precise to you, to be more clear to you, under the new tax regime, there is no restriction on the set off portion. So, if I adjust 550 minus 375, if I adjust 550 minus 375, I have another 1,75,000. I have 1,75,000. Loss brought forward for let out property. Once you bring it forward, same head. Current year loss can be set off against any income. Once house property loss is brought forward, where it is carried forward, it can be set off only against the income from house property. It cannot be set off against any other head.
So your screen is getting blurred, sir.
Naja?
the brought forward loss first set off
No, always current year. Set off, after that only brought forward and set off. The chapter name itself is set off and carry forward and set off. For example, current year, you have some business income, and or you have some business loss. You have house property income. There is a brought forward business loss also. Current year itself, I'll speak about speculation business income 1 lakh, general business loss 80,000, brought forward business loss 50,000. You should first set off this 80,000, and then only, because that 8-year period might have, for that 8 years from that year, what you are trying to do, now I will set off this 50,000, and from this year I will take another 8 years to set off this particular loss. Not acceptable, boss. Check it out. Pakka clear? Okay. Are you understanding? Okay. Okay. No, okay. I'm not touching upon assessment of individual now. I'm going to TDS, TCS, and Advance Tax. Let's do assessment of individual tomorrow. Let's complete the small areas today, so that assessment of individual, that 12 questions. And if at all any additional thing you want me, you can just text me. That I will definitely frame questions and take it up with you. All I have taken is from the MTPs, RTPs, and other things. So because these are being often tested or repeated, that's why I have taken like that. Quick update on the TDS, TCS. Okay. Again, lot of amendments in this year, that is the subsequent year. Advantage as well as disadvantage. Advantage is whenever there are amendments, the questions will be very simpler for the examination year. Disadvantage is you should immediately forget after exams, which is not a disadvantage. I understand from your point of view, my dear friend. Okay, that you need not worry, sir. That we will take care. You just take care of what we should remember. Okay, so in that manner, it is going to be straightforward. We know salaries, Okay, that is the only thing which needs to be computed, and then all other things are rate. I think we have done it in a sheet of paper. Okay, before going to the examination, please look into that sheet of paper. That will be sufficient. As we do the questions, we will pick it up with the provisions. I am in page number 33. Mr. Samir, aged 52 years, provides you the following information and requests you to determine his advance tax liability with the due dates. Advance tax is payable and the installment of 15%, 45%, 75%, 100%. Okay. Estimated total tax liability, TDS. Will your answer change if he is aged 62 years instead of 52 years? For a senior citizen, advance tax provisions does not apply, provided he does not have business income. If he has business income, the answer will be the same. We will write it, okay, first. This point is known as tax due. This point is known as tax due, one of the most important point in our working. Okay, I'll do one more question and then come to the second question. Question number 7. Question number 7 in page number 35. Total income of the individual opting for default tax regime, TDS, advance tax paid per installment, compute interest under section 234C. What is 234C? Non-payment or short payment of installments of advance tax. And there is a tolerance factor. First two installments alone, 12% and 36% if you have paid, I am ready to tolerate or waive the interest. Base tax, that is the income is 17,18,000. Base tax 17,18,000 minus 15 lakhs into 30% plus 1,50,000. Am I clear? Okay, 17,18,000. So 2,18,000 into 30% plus 1,50,000. Is this correct?
Yes.
Okay. Add HEC at 4%. Total tax payable minus TDS credit is 50,000. Okay. On or before 15th June, 15% of tax due. Okay, 26,102. But I have paid only 25,000. Tolerance 12% of tax due. Actual paid since more than 12% is paid, 12% or more is paid, interest will not be charged. So for this installment, no interest under 234C. On or before 15th September, 45% of tax due. Tolerance 36% of tax due. Actual paid 50,000. Since it is lesser than tolerance, interest on that deficit, that is difference between payable and paid, will be charged at 1% for 3 months. So, very carefully in examination tension, we should not reduce 62,146 minus 50,000. In examination tension, we should not, suppose tolerance we have worked, in a tension we will work 62,646 minus 50. No, it is actually 78,307 minus 50,000. What is payable tolerance is just to check whether interest will come or not. If interest will come, it is on the total deficit. Okay. Okay. From question number 2. Examine and compute the liability for deduction of tax at source, if any, in the cases are stated here under. For the State Bank of India pays 70,000 and 60,000 as rent to the central government and Mr. Kunal respectively for building in which its branches are situated. For government, no taxes. For government, no taxes. For Kunal, it will come under 194I, 10%. It will come under 194I, 10%. Okay. Okay. Can you mark it there itself? Okay. For government, no TDS. For government, no TDS. For Kunal, 194I, 10%. For Kunal, 194I, 10%. Okay, in examination, you should write it as it has exceeded the threshold. So 194I has a 2,40,000 threshold. Here 60,000 per month, which means 7,20,000. So 10%. Payment of 2,50,000 to Mr. Deepak, who is a transport operator who owns 8 goods carriage but does not furnish PAN. I'll write the answer for this. Payment to GTA falls under 194C. Goods transport operators or goods transport agents falls under 194C. However, one exception is provided in the law where the assessee submits declaration that he does not own more than 10 vehicles and also provides PAN, then tax is not liable to be deducted at source. In this case, assessee fails to provide PAN. Hence, the rate of deduction is 20%. 2,50,000 into 20%. Are you understanding? Okay. Suppose had he provided PAN but not declaration, 2% or 1% individual. Okay. You understand? Declaration you are not providing. PAN provided 1%. PAN not provided 20%. Both the declaration and PAN provided, no TDS. Briefly discuss the TDS, TCS under the Income Tax Act for the Mr. Harish purchased an overseas tour package program for Switzerland for himself and his family 10 lakhs on 111 from an agent who is engaged in organizing foreign tours. He made the account pay check and provided PAN to the seller. According to section 206 C1G, okay, foreign tour operator is liable to collect tax at source. Foreign tour operator, okay, OTT, overseas tour operator, is supposed to collect tax at source. Threshold is nil. Right from, even if it is for Sri Lanka 50,000 rupees, I am liable to collect tax at source. I am liable to collect tax at source. TCS rate up to rupees 7 lakhs, 5%, and more than 7 lakhs, 20%. TCS rate is very high in these cases. So, in the given question, first 7 lakhs, balance 4 lakhs,
Three,
10 or 11,
10 lakhs.
10. Clear? Aditya pays 55 lakhs to Mr. Naresh for supply of labor for carrying out construction work of his factory. During the previous year, Mr. Aditya's turnover was 95 lakhs. There are some provisions which are not applicable for individuals and HUF whose turnover is less than 1 crore or gross receipts less than 50 lakhs in the immediately preceding financial year. How do we remember it? We remember it by an acronym, hijack. Okay, 194H, 194H commission and brokerage, 194I rent, 194J professionals, 194A interest, 194C contract. Okay. Briefly discuss the provision of TDS. Yeah. Mr. Vikas received 10 lakh 20,000 as premature withdrawal from Employee Provident Fund before continuous 5 years on account of termination of employment due to ill health. Yeah, payment is more than 55 lakhs. Very good. Sorry, I should have thought it. But very good answer. Very, very appreciable answer. I should have thought it. Okay. Provisions of section 194M specifies that tax will be deducted on contractual payment which is not covered under 194C. In the given case, the threshold has also been exceeded, that is rupees 50 lakhs. Hence, TDS will be 55 lakhs into 5%. In that section, it is 5%. Super answer, Manata. Very good thinking. Clear, friends? Clear? Okay. Here, 10,20,000 and it is due to termination or of employment due to, I think, I'll just check whether there is an exception notification. In this case, it is on death, it is not taxable. Okay, that part I know. But exceptional notification for ill health irkan, I'll just check. As of now, write and keep 192A 10%. 192A 10%. Indian Bank sanctioned and disbursed a loan of 12 crores to B Limited. B Limited paid a sum of 1,20,000 as service fee to Indian Bank for processing the loan. Any payment to bank and the government, no TDS. No TDS obligation. Any payment to bank or government, no TDS obligation. Question number 5. Mr. Deepak wishes to purchase a residential house costing 60 lakhs from Priya. The house is situated in Chennai and the stamp duty is 65 lakh. He also wants to purchase a rural agriculture land for 65 lakh. Both the buyer as well as the seller are resident Indians. Friends, for rural agricultural land, 194 IA is not applicable. This is coming under 194 IA. Okay, in your notebook, please. In your notebook, please, question 5A. Okay. Section 194 IA is applicable for purchase of immovable property other than rural agricultural land. Threshold is rupees 50 lakhs. Okay. tax is liable to be deducted either on the actual consideration or stamp value, whichever is higher. Tax is liable to be deducted either on the actual consideration or stamp value, whichever is higher. Okay, okay. Here I am writing a small note which they have given it as a circular. Okay, the consideration is for all owners together. Suppose if Mr. A and Mr. B are owning the house and the total purchase consideration is 90 lakhs. 45 lakhs to Mr. A, 45 lakhs to Mr. B. I have to deduct. Okay, if the consideration is the threshold and not per owner, the consideration is the threshold. 50 lakhs is the threshold and not per owner. This has been clarified recently by the CBDT. Okay. ABC and Co, a partnership firm, is having a car dealership showroom. So they are coming to a TCS provision, TCS under 1F, 206C 1F for luxury cars. Luxury cars means the value of the car exceeds 10 lakhs per car. The value of the car exceeds. They have purchased cars for 2 crores. They have purchased cars for 2 crores. 206C 1H, which is, 194Q. Okay, purchase. Okay, there are two conditions for 194Q. The total turnover of the immediately preceding year should be more than 10 crores and the transaction value should be more than 50 lakhs. In that case, on the amount exceeding 50 lakhs, 0.1%. 0.1% is the TDS. Purchased cars from 2 crores from XYZ car manufacturers. The cost of each car more than 12 lakhs. They sell the cars to individual buyers at a price yielding 10% margin of cost. Turnover of ABC and XYZ Limited was less than 10 crores during the year. So for the purchase, no TDS, but they are liable to collect TCS. They are liable to collect TCS. I will write a detailed answer. I'm coming to that. I'm only now written for the purchases. I'm yet to come to sale of cars. Shall I? Question number 6. Examine TDS, TCS as per the Income Tax Act. Mr. Arjun, a resident Indian, is in retail business in Delhi with a turnover of 9.90 crores. So less than 10. He regularly purchases goods from Mr. Saurabh, a wholesale dealer. GST rate of such goods is 5%. The aggregate amount of sale made by Saurabh to Arjun was 49 lakhs without GST. So without GST only I should see. It is on the gross, it is not on the total component, only on the goods component. For GST, no TDS. Mr. Arjun made the payment for consideration of goods. Mr. Saurabh turnover was 10.10 crores. So no TDS, no TCS. Yeah. He regularly purchases goods. So the seller happens to be Saurabh. The seller happens to be Saurabh. For Arjun, 206, 194Q is not applicable because his turnover has not exceeded 10 crores. For Saurabh, 206C 1H is applicable because his turnover has exceeded 10 crores, but no TCS because the goods value, that is for GST, no TDS. That's a circular by CBDT. So if I exclude and see the GST, it is only 49 lakhs. Please write it and keep in a short manner. Just a minute. Mr. Raja paid 12 lakhs on 1/11/23 to Thomas Cook for a holiday package to Singapore with his family comprising of wife, 2 children, being twins in the last week of November. Raja remitted 10 lakhs on 28/3 out of his personal saving under LRS through bank as gift to his sister residing in London on the occasion of 50th birthday. Good. So the second part is there. That's why I'm doing it. Overseas tour package, no threshold, 206C 1G, no threshold. Okay, or say no threshold. On the first 7 lakhs at 5%. On the balance 5 lakhs, right?
Yes,
at 20%. So total TCS will be 1,35,000 by Thomas Cook on this. 1,35,000 or by Thomas Cook on this. Now coming to the second part. He made a remittance to his sister residing in London. In all other remittances, please understand. In all, I want you to understand, okay, 206C, because that's a questionable area for us. In all question papers, they are asking. Okay. So OTT, we know. Okay. The others are split like this, my dear friends. If it is for medical and education, 7 lakhs is the threshold. Okay. Balance 5%. Balance 5%. Okay. If it is a repayment of loan, okay, educational loan, again 7 lakhs, nil, balance 0.5%. 0.5%. And the last is others. Okay, 7 lakh is the threshold, balance 20%. Balance 20%. Are you understanding? Okay, are you understanding? So, depending upon the purpose, the others vary. In this case, okay, Mr. Raja also remitted 10 lakhs out of his personal savings under a, so it falls under others. It falls under others. Gift to sister falls under other remittances. Threshold 7 lakhs. On amount exceeding 7 lakhs, TCS will be 20% by the banker or authorized dealer. So in this case, he has remitted, okay, 10 lakhs. Question 7 we have done. Question 8. Compute TCS in the following independent cases. Foreign tour undertaken by two individuals, Vishal and Vishnu. 5 lakhs, 10 lakhs. 5 lakhs is 5%. 10 lakhs, first 7 lakhs 5%, balance 3 lakhs 20%. Foreign remittance towards medical expenses. First 7 lakhs nil, remaining 5 lakh 10,000 into 5%. 5 lakh 10,000 into 5%. Let me tell you, medical expenses, the CBDT circular has said, of course, maybe for final, but what is medical expenses? Travel for medical purpose is also medical expenses. Treatment, stay for getting treatment. All these things are considered as medical purposes. Foreign remittance for educational fees, 6 lakhs, no TDS, no TCS. No TCS. Repayment of loan, 3 lakhs into 0.5%. 3 lakhs into, first 7 lakhs nil, 3 lakhs into 0.5%. Okay. Please be little sure about 206C 1G before that sheet which we have prepared. Please prepare, read and go. Sale of car by a dealer to a customer 15 lakhs. Okay, my dear friends, exceeds 10 lakhs. Sale of car to a customer 15 lakhs. 206C 1F. 206C 1F. 1% you should collect TDS. 1% you should collect TCS. Sale of car to another dealer, no TCS. Okay, only if it is to a customer, 206C 1F is applicable. If it is to another person, it will not be applicable. It will not be another dealer. Manufacturer to dealer, dealer to dealer, no TCS. Dealer to customer, TCS. Sale made to a customer 25 lakhs per quarter. The turnover of the selling organization in the previous year is 11 crores. 11 crores. So 206C 1H. Okay. My dear friends, first quarter, no TCS. No TCS, only 25 lakhs. Second quarter, no TCS. Because up to 50 lakhs, no TCS. Up to 50 lakhs, 25 lakhs per quarter, so no TCS. Third quarter, 25 lakhs into 0.1%. On the amount exceeding only, you should compute 25 lakhs into 0.1%. And again, fourth quarter also 25 lakhs into 0.1%. Is the class clear? Please read TCS also. Okay. 6 marks, 2 marks, 3 questions. 1 will be from TCS. 2 will be from TDS. TDS you will be very familiar, but majority of the time but 206C 1G is becoming very, very popular both in inter and in final question papers. Am I clear to you? Okay, we'll stop here today. Tomorrow morning, I will start with filing of returns and proceed with the assessment of individual. Day after tomorrow, by 9:15, we will close, go to the temple, and then we will meet officially in the classroom for final. Okay, I'm happy you all prepared well. Okay, I'm really happy about it. Continue the good work. We'll hit it big. All the best friends online.